You know that specific moment when someone asks when you're going to buy a house, and your answer is not yet. Not because you can't, but because the number isn't where you need it to be, and you know exactly what number you are waiting for, and exactly how far away it is. And the person asking doesn't quite understand the answer. Because the question assumes that waiting is what happens when you're not ready yet. Not that waiting can be the most deliberate financial decision someone makes in a decade. And somewhere nearby, someone is signing the paperwork on a house they can afford. Just not quite in the way the paperwork suggests. With 5% down. With a line on the mortgage statement they have not finished reading. With a monthly payment that includes a charge for the privilege of not having waited longer. While you wait. And the number gets closer. And the payment, when it comes, will not include that line. Here is what almost nobody calculates about buying a house before they're ready. The mortgage is never just the mortgage. In most markets, buying a home before the financial position is ready comes with a cost that is not the principal, not the interest, not the taxes, a separate charge that exists to protect the lender, not the buyer, for as long as it takes to close the gap between what was brought and what was needed. The specific form varies by country. The principal does not. In the United States, it has a name. Private mortgage insurance, a separate charge added automatically for a product the buyer did not choose and does not benefit from, which exists to protect the bank in the event the buyer cannot pay, and which will continue to appear every month without interruption until the loan balance drops to 80% of the home's value, a process that, under normal payments, takes somewhere between 7 and 11 years. Private mortgage insurance, not insurance the buyer chose, insurance the bank required, because the buyer arrived before the number was ready. The monthly cost is not dramatic, a few $100s depending on the loan size, easy to absorb into a payment that already has many components, easy to overlook in the initial excitement of having bought the house. But the annual cost is real, and the total cost, accumulated over the years it takes to build enough equity to eliminate it, is a number that would have looked different in the conversation about whether to wait. Nobody presented it as a single figure at the closing. It arrived as a line item on a monthly statement, small enough to accept in the moment, large enough to matter across the years, paid not to build anything, but to compensate for the gap between what was brought to the table and what the bank needed to feel sufficiently protected by the transaction.
There is a name for why people buy houses before the number is ready.
It is the same name as every other decision made in response to what everyone else appears to be doing. Real estate FOMO. The fear of missing out applied to the housing market arrives in 3 arguments that feel like facts, but function more like pressure. The first, renting is throwing money away. It is not. Rent buys housing without a maintenance reserve, without a down payment tied up in equity, without the risk of a market that moves in directions nobody predicted. The second, the market is always going up. It is not always. It went somewhere else in 2008 and took a significant number of underprepared buyers with it. The third, you are losing equity every month you wait. You are not. You are avoiding private mortgage insurance and keeping your down payment liquid while it grows. And these 3 arguments
Found an industry designed to deliver them.
The National Association of Realtors has run the same message for decades. Now is always a good time to buy. Not because it always is, because the industry earns when transactions happen, and patience for a commission-based industry is indistinguishable from lost revenue. Always waiting to buy the house is not falling behind the market. It is the specific refusal to let cultural urgency replace financial readiness as the signal for when the decision should be made. And the numbers confirm what the patients already knew. According to the Consumer Financial Protection Bureau, private mortgage insurance typically costs between 0.5% and 1.5% of the loan amount per year. On a $400,000 home purchased with 10% down, that is between $1,800 and $5,400 annually, paid to the bank, not to equity, not to principal, not to anything that belongs to the person paying it. Over 7 to 11 years of normal mortgage payments, the total PMI cost on a typical loan runs between $25,000 and $40,000, a number that was never in the conversation about whether to wait. 3 forces. A culture that made buying before you're ready feel like ambition and waiting feel like falling behind. An industry with a direct financial incentive to keep the urgency alive, and a charge, monthly, automatic, invisible in its smallness, that accumulated into a number nobody chose to pay and nobody named at the closing. It was there the first time the full calculation was done. Not the mortgage payment alone, but the mortgage payment plus PMI plus property taxes plus maintenance reserve, and finding a number that looked different from the one that had been discussed, before the lines below the headline number had been added to it. It was there the conversation with someone who had bought 2 years earlier, who mentioned, without particular drama, what they had been paying in PMI for those 2 years, what they had paid in total, and that they had recently passed the threshold to eliminate it, and the specific quality of a number that had been paid for 2 years without being noticed as the thing it was. A cost of having arrived before the bank was satisfied. It was there, the moment of deciding to wait. Not because the market was wrong, not because the timing was impossible, not because the house was unavailable, but because the number was not ready. And arriving at the house before the number was ready meant paying for the gap between what was brought and what the bank required for years after the keys arrived. It was there the year the number finally reached the threshold, the specific quality of a closing that did not include that line on the statement, of a monthly payment that was only what it said it was, without the charge for having arrived before the bank was satisfied that enough had been brought to the table. And it was there the story told by someone who bought differently. The afternoon the keys arrived, the photographs, the congratulations, the pizza on the floor among the boxes. And then, 3 weeks later, the first mortgage statement. A line they had not remembered agreeing to. $300. Again next month. And the month after that. For years. Just there, on the statement, every month, for as long as the gap remained. These are not people who don't want to own a home. Most of them have a number, specific, calculated, updated occasionally as the market shifts, that they are working toward with the same deliberateness they bring to everything else that has a price and a timeline. What they do not have is the urgency to arrive before the number does. The pressure to buy now because waiting feels like losing, because everyone else appears to be buying, because the culture has decided that readiness is measured by the desire to own rather than the full and careful preparation to do it without paying for the gap between what was brought to the table and what the bank needed. They are the person who, when asked why they haven't bought yet, gives an answer that is simply accurate. We're close. We want to bring the full 20%, probably another year. That is not someone who cannot buy a house. That is someone who decided that buying the house and buying it right are not the same deadline, and that the urgency to close the gap between those two dates belongs to everyone except the person who will live in the house for the next 30 years. They do not feel the cultural pressure to buy before they're ready. That pressure was examined, found to be driven by forces with no stake in the outcome, and set aside, without apology, while the number continued to grow. Now, finally, the objection. The market won't wait. Every year you delay, prices go up and you fall further behind. Renting is just paying someone else's mortgage. The sooner you get in, the sooner you start building equity. This is not about never buying a house with less than 20% down. There are markets and programs where that calculation works differently, where assistance is available, where the PMI cost is offset by specific local conditions.
Nothing here argues against every instance of buying early.
This is about the decision made not from a clear-eyed look at the numbers, but from the cultural pressure of not wanting to be the person who waited too long, which is a different kind of decision entirely. And the prices only go up argument carries less certainty than it assumes. Markets correct. People who bought in 2006 spent years underwater on mortgages that exceeded the value of their homes. The timing of a purchase matters, and the financial position from which the purchase is made matters more than the urgency to make it before the position is ready. The people who always wait to buy the house are not losing the market. They are simply refusing to let the market's momentum replace their own readiness as the reason to sign.
Here is what most people get backwards.
The person who buys the house when the culture says it's time, who signs at 5 or 10% down, who absorbs the PMI into a payment that already stretches the budget, who arrives at the market because the pressure to arrive became louder than the number that wasn't ready, is not building wealth faster. They are paying a monthly tax on having arrived before the bank was satisfied, for as long as it takes for the gap to close. The person who always waits to buy the house is not falling behind the market. They are arriving at the purchase with the full number, not the number that gets you in, but the number that gets you in without paying for the gap between what you brought and what the bank required. Most people buy the house when the culture says it is finally time. These people buy it when the numbers say they're ready.
And the house is the same house.
The statement is not the same statement. There is a moment people who always waited to buy the house all describe in almost the same way. It is not the closing. It is not the first mortgage statement without the extra line. It is somewhere in the waiting, an ordinary month of continuing to save, of watching the number move in the direction it was supposed to, of answering the same question about when they're going to buy with the same answer about when the number will be ready, and finding, briefly, that the waiting does not feel like falling behind. It feels like the only decision that is entirely theirs. Not pride, not patience as virtue, just the quiet certainty of someone who knows what they are waiting for and why, and who will not mistake someone else's urgency for their own. Not because the market is always wrong, because arriving ready is a different thing from arriving early. And the difference lives on every mortgage statement for the next decade. The house was never the point. What being willing to wait for it said about everything else was. 10 years from now, nobody asks when you bought. They ask whether you arrived ready, and whether the statement from the very first month said only what it needed to say. Are you still waiting to buy? And has anyone ever made you feel like the wait itself was the problem? Drop it below. We read every single one.